And welcome to the channel, everyone. Today we are going to be discussing one of the biggest secrets in finance that is hiding in plain sight. So let's get to it. So what is the secret? It is fixed income securities. I'm talking bonds and not the guy off to the right there. We're talking asset-backed securities, structured products, and other fixed incomes. Your finance and your crypto bros do not talk about fixed incomes because they're not cool, they're not sexy, but absolutely everyone is buying them. It is a global and an industry-wide market. It is bigger than the stock market, and we are to discuss just how big that market is, who's investing in them, and why you should too. So just how big is the fixed income market? It's $126.9 trillion as of year-end 2021. Stocks only came in at 124.4 trillion in market cap. Stocks have been slowly gaining. The fixed income market used to be much bigger, but it's still gigantic and it is still bigger than the stock market. You can see below in the chart, annual issues for fixed incomes absolutely dwarfs equities for stocks. So who all is buying these and what's going on? But before we get there, it is time for a shameless plug. If you're enjoying the video today, please go ahead and hit that like button and subscribe to the channel. We really appreciate it and it helps us out. If you have any questions, comments, concerns, or requests for other topics, please go ahead and put that down below in the comments section. Now let's get to it. So we already covered it. This market's gigantic, but who's actually doing the investing? Your main part, it's those institutional investors, the big guys, your insurance companies, your central banks, your hedge funds, pension programs, endowments, mutual funds, and other fund managers. These guys are investing in fixed income like crazy. For example, your insurance companies, more than half their balance sheets, 61.4% in 2020 of their invested assets were in fixed income securities, as opposed to only about 14.5% in stocks and 8.3% in mortgages. A general ratio for your healthy portfolio, you should be looking 60% equity, but you should also be mixing in 40% fixed income. So why invest in these bonds? Let's talk about it. So first off, if you don't know exactly how a bond or a fixed income product works, we did a video on that in the past. That'll pop up right now. Feel free to go ahead and click that link and learn a little bit more about the products. But otherwise, why should you invest in them? They've got generally predictable returns. The returns are usually stated up front. You know what you're getting over the long haul. You can plan around it in your portfolio. Generally speaking, bonds are on the less risky side as compared to equity. Even a lot of these asset-backed securities that get a bad name sometimes generally have a lower risk profile. But there's a sliding scale of risk profile, so you can choose to be more risky and push return if you really want to. There's different exposures on these products. You can have your regular debt, normal type bond that's either a corporate or a government, but you can also have asset-backed securities that are exposed to mortgages, loans, consumer debt, pretty much anything you can think of, there's exposure to via these products. Subordination is the other one. Debt holders almost always get paid out first in the event that a company goes down ahead of equity holders. So these products, specifically on the bond side, are definitely a cut above equity in that term. And they're still very liquid products. For the most of these, they're very liquid. They're generally a little bit less liquid than stocks, but they're way more liquid than any other type of alternative investment. So in summary, these fixed income products are a huge market. They're one of the world's biggest financial markets. They're bigger than stocks, but nobody talks about them because they're not cool and they're not sexy. But they're the perfect part of a well-diversified portfolio. And among them, there's a diversity of issuers, products, and exposure to different industries. They're held by the largest, most successful investors on the market, and they're generally way more stable than stocks with significantly less volatility. So if you don't have fixed income as a part of your portfolio, you should definitely look into making it part of your portfolio. And that wraps up today's video. If you liked it, please hit that like button and subscribe to the channel. It would really help us out a lot, and we would greatly appreciate it. As always, if you have any questions, comments, concerns, or anything at all to say or requests for other topics, please go ahead and put those down in the comments section. So thank you for watching, and we'll see you next time.